Hello guys, welcome back to another video. And in today's video, I want to give you guys an update on the dollar index as well as GBP USD, US oil, the Nasdaq 100 as well as the Dow Jones and gold. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the video, please smash the thumbs up for the YouTube algorithm. Let's try and get at least 100 likes on this video, my good friends. Now, if you're looking for signal services or anything just to pass a signal, pass a funded account, we do offer signal services as well as mentorship and one-on-one at an affordable price there as well. Now, the dollar index has been somewhat, been finding its feet this week there as well. And a lot of people has been asking me, hey, what's going on in the markets? What's happening? Why is gold suddenly all of a sudden started to take off there? Printing this massive bull run, and people in the 1 hour time frame was going like, oh my god, what is going on here with gold? But at the end of the day, what we saw basically on when was it now, on on Tuesday, was the US hills, treasury hills, took a massive dip, and because of that we saw the dollar index decrease in value. Precious metals, which are negatively correlated, as well as the stock market that are negatively correlated, then started to move to the upside. However, we also have something else that is also keeping things up in place here as well. Now, firstly, we do know, if we just go slightly back over here, we've got the congressional, elections taking place at the moment there as well. And we also can see a Trump gears up to run after midterms. Many Republicans appear unexcited there as well. Well, Trump is also in the news now, so he might be putting his head in there as well. But other than that, the markets are still awaiting the outcome to see what's going to happen. Apart from that, we shouldn't just keep our focus on that. We also got CPI data coming through tomorrow, which is the consumer spending price index, month over month and year over year. We've got the core CPI month over month. We've got the Premilin, uh, you know, uh, consumer sentiment coming through as well. CPI data, if you are new to the channel, if the CPI data comes through higher, it just means consumers are spending higher, and that means that the Feds are more likely to hike interest rates, meaning that the dollar index is more likely to increase in value. The reason why the Federal Reserve does this is because they want to cool the market down, and the only way to cool the market down is to discourage consumers to spend, and the only way to get people not to spend is to make their debt more by hiking interest rates there as well. Next up, article by CNBC reads that the Dow Jones slides over 200 points at the open as control over Congress remains unclear. This basically tells us that because the market doesn't understand what the information, what the results were, the market had basically slid 200 points, which is quite funny. Because apart from the fact that the market had slid 200 points, the market's also trading at monthly, weekly, and daily structural levels there as well. And it's kind of funny how, the news comes out and you're like, the Dow Jones are falling, which is basically what it's doing now. It's not really falling. If you remember the analysis that I did on Friday, I told you guys that we can expect the market to continue higher, and now we can expect the market to continue lower once again. We are going to get to the technical analysis there as well. Said yes, stocks were lower on Wednesday following recent market gains as a result of the midterm elections provided no clear answers about who would be in control. Now, one thing to keep in mind about the midterm elections, in the past, many times that it had taken place, that never had a positive impact on the stock market. The stock markets were normally the people that were not the people, but were normally the instrument that suffered a loss because of it. But what would be good to see is a diversified portfolio, because I mean the stock market would welcome that, especially after the stock market is down over 17% for this year as well. Especially the S&P 500. The dollar index is starting to pull back, just like anticipated on Friday. And then moving along, we can also see, the Meta, the people from that was previously Facebook, laid off more than 11,000 people, employees. Mark Zuckerberg, let us announcer. And basically, how this works is, so what happens is that when the Feds come in and they hike interest rates, right? What this does is, This then puts the press on consumers to then spend less because they want to bring down the CPI, which is an indicator used to measure inflation. Now, companies listed on the stock market, which is Facebook, not Facebook, Meta, Google, all of these companies make money through consumer spending. But if consumer spending is high, and the feds need to tame that down, like, just to say, hey guys, you need to stop with the spending. What they do is they hike interest rates, getting people to spend less. And as a result of this, the companies listed on the stock market, there's a lot of companies that is made up. Like I said, now Meta, they make money through running Facebook ads and all of that stuff. So if the company's not making enough money, then they tend to they have to let people go. But we know that Mark Zuckerberg was on the roll or on the path to introduce the metaverse, which hasn't been doing that well there as well. It says here the company cost and expenses jump. The company's cost and expenses had jumped 19% year over year in the third quarter to 22.1 billion because of someone that is trying to sell something that they know that doesn't work. It reminds me of someone that some people that's selling bots and renting cars out there, but that's none of my business. Next up, also Elon Musk has been in the news once again, saying yeah, Elon has fired people and then recalling them back once again. Now, basically, what you can see over here, and I don't want you to focus on the fact that he's recruiting the people or asking them to come back. What I do want you to focus on is the fact that people are starting to lose their job. And if you remember many, many, many months ago, this is exactly what I said. Paul had also stated in February that people are going to lose their jobs as the Feds continue to hike interest rates there as well. Higher interest rates is always good for currency. This attracts investors in the future there as well. Now, with the technical analysis, we can clearly see the dollar index has probably pulled back 0.3.2%. Then is also testing this level over here. Now, we can see how the market had printed this massive impulse. Let me just zoom in a little bit over here. So we can firstly see how the market printed this massive impulse. After an impulse, you expect a correction. If you take your Fibonacci from the low to the high, you can see we had a 0.382 pullback. And if we use this array tool over here, and just to look sideways, you can see that the market is currently testing this structural level over here that it had created. This level here acted as a level of resistance. The market broke above that, came to test it as support. We now have the minus 27 that's lining up closely with this structural level that we can identify on that side there. Once again, on the weekly time frame, what do we have? Now, from a weekly perspective, it's clear that the market is currently testing previous level of support over here. This level acted as a level of resistance. The market broke above that, came to test it as support. Definitely expect a pullback to the upside there once again as well. On the daily time frame, like I said, if you remember the conversation I had on Monday, saying that the market could potentially be moving sideways there once again, what we can see over here is that the market is trading at a very strong level of support. And also we can see how the market had also basically showing us kind of that it not wants to, but we could potentially see this sideways movement. We also have this massive impulse to the downside, and if you take your Fibonacci from the high to the low, we had not seen a 0.382 pullback. If anything should happen, we should see at least the market pull back to this level. Now, what I would be looking for today is a clear daily close above this level. Alternatively, if this daily candle does break below this and close, then we can definitely expect the market to continue lower. Alternatively, the only way now is for the market to continue higher. And the best way to do this is to make sure that the market creates and breaks structure on the daily time frame. Now, next up, we do have a GBP USD, and we can see GBP USD also trading at a very strong structural level here, acted as a level of support, broke below that, tested it as resistance, not once but twice, and the market started to move to the downside. Now, because we're looking for long-term selling opportunities, we definitely expect the market to close below this level that had acted as a level of resistance. Market broke above that, tested as support. Support is not holding. Market broke below support, tested previous support. So we can definitely expect this market to pull slightly back before that continuation to the downside there. Once again, also, that is basically what I will be looking for the market as the while waiting for the price action to develop in this sense here as well. Next up, we do have US oil. US oil is negatively correlated with the dollar index. As the price of the index increases, we tend to see a weaker price in the US oil. You can see this is exactly what we've had over here after the massive bull run throughout the COVID pandemic period there as well. Well, after, not before. I still remember, I think during the pandemic, we saw gold going back to zero. Yeah, gold is selling for for nothing. Not gold, sorry, the US oil. So looking for some short-term selling opportunities over here. What we can see here on the daily time frame is that we can see the market is currently testing previous support. Again, I would like to see this daily candle closes below this. Then on the retest, we can definitely start looking for that continuations to the downside there once again. Next up, we've got the Nasdaq. Now, the Nasdaq 100. First, if you start on the monthly time frame, what do we have now? Here, from a monthly perspective, you can see how the market had broken below this previous level of support, came back to test it as resistance, and this is ideally the next target level that I would like the Nasdaq to come and test. If it's if you took on the weekly time frame, what do we have? We do have this confluence that we have over here of a potential head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Apart from that, the market is in deep bearish territory as we broke below support, coming back to test it as resistance once again on the daily time frame. What do we have now on the daily time frame? Firstly, we can see we have this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction by taking your Fibonacci from the high to the low here. We can see we had a 50% pullback, and that pullback is also lining up perfectly with that previous level of support that is now acting as a level of resistance. Now I do expect the market to continue lower and go and test that previous level of support there as well. Next up, we do have the Dow Jones. Now the Dow Jones here on the monthly time frame is currently testing previous level of resistance. This level acted as a level of support. The market broke below that and it's now back to test it as resistance. Now you can see that the Dow Jones is more bullish than bearish. Sorry, more bullish than the Nasdaq's bearish, because the Nasdaq is bearish due to the poor performance in technical companies. And the Dow Jones make up the industrial companies, and that's why you see the different price action. It doesn't necessarily mean that the market is not going to pull back. We have this massive impulse to the upside. If you take your Fibonacci from the low to the high, we need to pull back to at least this level over here. Now, this level in the market acted as a level of support. The market broke below that, broke above resistance. We expect the market to continue lower if we do need to see any continuations to the upside there. Once again, if we go on the daily time frame, what do we have? Now, from a daily perspective, we know that this is the level that we do want to target. Now, the best way to approach this is we can see how the market is currently testing previous level of resistance as support. Now, we want to wait for the market to break below this level of support, come back to test it as resistance, and then start looking for that continuation to the downside there as well. Next up, we do have gold. Gold also printing some massive green candles, and that was obviously after it was noted that precious metals is not that ideal in the markets there as well. But I would be very careful with gold in particular. Gold do have some clearance there on the upside, and then from there we could potentially start seeing that move to the downside. But we can also just expect a massive dump to come on the monthly time frame. What do we have now? Yeah, on the monthly time frame, we can see that gold had broken below this very strong level of support and it's back to test it once again as resistance here as well. So about that, we can also consider this monthly structure, but we're going to dive a little bit deeper and just use this one over here and this level here acted as a level of support. The market broke below that, and it's back to test it as resistance once again. We do expect a continuation to the downside, but it's all about where we get that continuation in as well. Now, from a weekly perspective, we can see that gold is currently coming to test that left leg of this W formation. Now, after W formation, you expect to pull back to the left leg before that continuation to the upside there as well. So I definitely expect gold to just make a U-turn and continue higher on the daily time frame. What do we have now? From a daily perspective, I do expect gold to push slightly higher purely due to the price action that we do have, and that is about it. So what I do see take place here is I expect gold to continue slightly higher and then pull back there once again for the market to come and test or hit the neckline of the W formation there as well. It's important that you keep your eyes out on the CPI data. A higher number would suggest a higher interest rate. Anything lower would be negative for the dollar index there as well. That's all from my side. Thank you for your time. And as always, cheers for years.